We want to turn our attention back to the economy and putting people to work. Tomorrow, we get the Labor Department numbers, but we got the initial claims for unemployment. And Bill Rodgers is a labor economist, Labor Department economist, former, and Rutgers University professor. He is joining us now. It's good to see you.
Adam, great to see you as always.
Are we missing anything in these numbers where, we can all guess that the unemployment figure for May is going to be around 20%, or could it even be worse?
Yeah, this is that challenge again where the unemployment insurance claims, right, are the leading indicator. And tomorrow we're going to get what's the labor market's lagging indicator. Be that as it may, I think if we focus on today's UI claim number, still very high, but from a standpoint of we compare it to previous weeks, it's starting to get smaller, or the amounts of people filing is getting smaller, which does suggest that in the middle of May, 19 states had reopened or moved to reopen. In the last week, pretty much all states are now reopening, and they're moving in some kind of stage or phased opening. So in New Jersey, Governor Murphy, serve on his restart commission, he just announced that we're going to be moving to stage 2 as long as we continue to hit our health indicators. Now for tomorrow, I agree with you. Tomorrow, the unemployment rate, the official unemployment rate, could be close to about 20%. But again, because of the way people are answering the questions, or particularly what were you doing over the last 4 weeks? Well, my business was closed. I've been laid off. So they may say, I'm not working. So we make sure you look at the employment population ratio, the share of people who have a job, because that could either be going down because of continued losses, but it could also be starting to rise back up because there is some opening going on.
Bill, I want to ask you about stimulus and the interplay between stimulus and employment, because there has been a thought among some members of Congress, for example, that they should pull back on this stimulus or end the existing stimulus because it's an incentive for people not to work. In some cases, They're making more than they were at their pre-existing jobs. How are you thinking about that and getting people back to work in terms of whether stimulus is indeed a disincentive? Yeah.
So the stimulus has been and will continue to be very important. Why? In particular, because this was a consumer or consumption-driven recession or downturn, and that in order for consumption to return to previous levels or near previous levels, we actually have to have more confidence. Workers have to have more confidence that they can go into their workplace and be safe. Consumers have to have more confidence that they can go to those, instead of shopping online, that they can go to their favorite stores like they were before the pandemic, and we're not there yet. And so as a hedge, that's what this. And I'm not going to call it. I'm not correcting you, but it's other people. A lot of people are saying stim. I'm calling it relief. Right, we're still in the relief phase, and now moving into the recovery phase. So this relief is providing that bridge to the recovery, and until we start to see that confidence in workplaces, that confidence consumers have, that's when I think you can start to pull back some of the stimulus. The HEROES Act does a nice job of acknowledging that, hey, let's have some triggers that we'll start to pull back when we see the economy actually getting better. And I would like to see that type of movement. And then the other part of what you call stimulus, but again, relief, we know there's another wave coming, and it's not the COVID wave coming. It is the wave of state and local governments. Right? And my Governor Cuomo, many other governors have already been talking about the major hits that their budgets are going to be taking, and they can't print money. They have to balance budgets, and this is not a time for raising taxes. So you're going to see cuts, and these are cuts that will have a disparate impact on women and minorities because that's where many workers with those backgrounds are concentrated.
And Bill, Ines Ferre here. And speaking of women and minorities, African Americans and Hispanics have been particularly hit hard by the pandemic. Do you expect unemployment for those sectors, for African Americans, for Hispanics, to be as high in this next jobs report? And what can be done to remedy that?
Yeah, I do think that we'll continue to see increases in tomorrow's report. Why? Because during the survey, between the survey week in April and in May, there were about 14 million more people who did apply for unemployment insurance. So we will get a spiking up. And as similar to previous recessions, previous downturns, it's those jobs at the lower part of the ladder or upper in the middle part of the ladder that are hit first, and they have a higher concentration of minorities and women. So we probably will still see some more movement. The hopeful piece is that because UI claims are trending down, and there's some other data, not necessarily government data, that is suggesting we may have bottomed out, and as long as we can again grow and improve confidence in the workplace and in the buyer place, we'll start to see those leisure, hospitality, retail, those will come back. And now the hope will be that women and minorities who are represented in those occupations and industries will get pulled back just as quickly as their white counterparts or their male counterparts.
Bill, it's Brian Chung here. Obviously, just looking at the unemployment headline number isn't enough either. We want to know the types of jobs that have been lost and whether or not, as hopefully if we bottom out, whether or not those jobs will come back. So when we look at those lower income jobs, which has really been the focus of this particular recession, because on one hand, a lot of people have lost their jobs, but then secondly, a lot of people that are in those lower income jobs are actually still being required to risk their lives to go out to work. How are you kind of parsing through that when you look at the jobless claims numbers every Thursday morning, but then also the BLS report that we expect tomorrow?
Yeah, with the jobless claims, it's really difficult because you don't see that data right by race. I mean, the most filtered out we can see is by state. So you really are relying on the Friday jobs report to really look across race, ethnicity, gender, and industry. And then you also have a different report that comes in a few weeks, and that's the state picture. The other statistic that I focus on, and unfortunately also you don't get breakouts by race on it, but I think connects to your question, and that's that's the U6 unemployment rate, or many people call it the real unemployment rate, right? It's those people it adds those people who are working part-time but want to work full-time, and it also adds those people who stop actively searching, but if offered a job, they take it. I think you actually may see more of a spike up in that number tomorrow, more so than in the official unemployment rate. And my reason for that is that you have on one hand individuals who still could be losing their jobs or are getting moved from full-time to part-time because those companies or businesses aren't getting enough revenue. But then you also have the reopening that's going on too, where businesses, either because of the government sort of saying how we're staging this, 25% threshold, 50%, right, that they may not be able to, can't bring people back full-time right away. So that U6 unemployment rate is going to also be another really important indicator to watch. And
Bill?
Yes.
Bill, apologies, it's Julie here. While we have you, I also want to ask you, because I know one of the areas of your research has been African-American unemployment. Given what's going around the country with the Black Lives Matter protests right now, I want to take the opportunity to ask you what economic policies you think could be instituted to fight systemic racism, especially at a time when we have seen that Black unemployment rate tick back up.
Right. I have two pieces that I've written recently, one in the conversation that hopefully maybe your viewers would go check out, or also a piece that just came out in Barron's this morning. But in terms of policies, we have to have a two-pronged approach. One is we have to get back to enforcing anti-discrimination laws. We also, particularly at like the EEOC, their budgets have been gutted, but they've been really squashed over the last few years. And the Me Too movement actually did help to bring some revenue back to that agency, but they have tremendous backlogs in terms of people filing grievances with their employers. So that's the number one in terms of race and gender, and actually any disadvantaged group person who feels that they've been discriminated against. But then the economy, right, has changed so much to where you have many whites, right, who are now feeling the same kind of economic anxieties that have been historically in many Black families. In New Jersey, our ALICE population, where ALICE stands for Asset Limited Income Constrained and Employed, it's basically families who don't have enough resources to make ends meet in their community. That number has risen to almost 40%. And now, if African Americans make up 12% of the population, a larger share of that ALICE population are low and moderate income whites. Again, above poverty, yep. But they've shifted down. They've had difficulty with rising childcare costs, rising healthcare costs, stagnating wages, and that's what I think has been interesting about the protest. To me, this time they seem to be much more diverse, and it's also probably capturing a bunch of people who have lost their jobs, and so they're feeling that same anxiety, and the sort of middle class has been shifting.
Bill, it's always good to see you. Bill Rodgers is a labor economist, former chief economist at the Labor Department, and a Rutgers University professor. All the best to you, my friend.
Peace. Thank you, Adam.